What if I told you that buying a stock just to participate in dividend sharing would actually be counterproductive? Would actually mean that you are losing money and you didn't know. Stay with me, relax. I am going to explain it because so many investors get it wrong. See, running after dividends closure date because you want to participate or you want to qualify for dividends can be counterproductive. It may seem good, you want to qualify for that dividend, but there are some things that you need to consider before you run after qualification date. And that is what I am going to break down for you. Then it is now left for you to make the right choice. As I've earlier said, there are some dividends that do not worth all the stress, all the effort. Let us go and I will show you how it is done. And this is how it is done. In today's video, we are going to be x-raying, we are going to be looking at qualifying for dividends, the benefits, the pros and the cons. This is a common mistake that so many of us will make when we hear there is a closure date, a company has declared a dividend and people are running, investors, ignorant investors are running to qualify for that date. Sometimes you may not be a better option. You just need to wait and wait until the closure date has ended. For example, let me say XYZ company say their current price is 165 naira. That is the current market price. And they have declared a dividend of 20 naira. Final payment 20 naira, and you want to qualify, and they now tell you that the closure date is on the 10th of May. On the 10th of May. So you are running helter-skelter to ensure you qualify, because if you are able to buy this amount, you are most likely to qualify for this dividend. Meanwhile, because of the noise, because of speculation, this price is on the increase. It may get to the extent that before even the 5th of May, it is almost at 170 naira and it is moving. Now, what most ignorant investors do is that because they want to qualify and participate in this, irrespective of the volume that their money can be able to achieve, they go after it. Sometimes that is not the best thing to do, because there are so many other hidden things that may not be disclosed to you. One of them is that once this closure date has been achieved, 10th of May has come and gone, the price is almost likely going to be pegged. Rather, I won't use the word peg, it's going to be written down, and you discover that most times it is written down vis-a-vis the amount that they have declared as their dividend. So if the current price as at the 10th of May is 165 and they have declared 20 naira, it's most likely that the price will drop from 165 to 145, sometimes even less than 145. So that is the challenge. Is now you now discover that you have lost amount, and perhaps the volume is not sufficient or not substantial enough. So the best bet is for you to wait. Once there is a markdown at for 145, 150, any amount that is below this amount, it is better, because there is a pullback there. You can buy and buy much more without pressure or without any force. You can buy much. You can buy at 145, at 150, depending on the amount as at that point in time. So sometimes you need to wait, and when the price is marked down, then you can buy. And if it is a stock that you know can rise again after a few weeks, after a few months, then it will appreciate and it will get to this 165 and much more beyond. You will now prepare for the following year. Hopefully there will be good sales and profit will be declared and you can participate. But having said that, if the option A is still the best, if you can be able to ascertain that the company has history of always coming back, the history of when they are marked down after the dividend dividend closure date, you can be able to say, okay, they have the closure date has come, it has been marked down, but history has it that it tries this again, then you can buy. Or if it is a company that you know it is solid, good fundamentals and good corporate governance, then you can buy. Rest assured that even though it is marked down, over time it will spare, it will rise again. So it is left for you. So before you make the decision, before you buy, before you pursue that dividend, you must be rest assured that this is why, whether you are chasing dividend or whether you are chasing a solid stock for the future, I want you to remember that market will always reward those who are patient. If you have learned anything, which we pray and believe that you have learned, we want you to like, we want you to comment, and we want you to subscribe, and also want you to ensure that you put what you have learned in practice. God bless you. See you at the top. Remain at the top. It is Wealth Portfolio Builder. Bye bye.